everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Gareth Soloway of Verified Investing. Today we are recording on Monday, March 23rd. I know that's important, especially when we get into technicals and such. How you doing today, Gareth?
I'm doing great. Thanks for having me.
Yes, indeed. A lot of volatility overnight. We were talking offline with the prices of gold and silver just cratered overnight. I was able to pick up some shares on 24-hour trading and such. And so just curious in your perspective on how the markets are doing with this extreme volatility with the war in Iran.
Yeah, and it is really remarkable to see. For instance, silver was as low as 61 this morning, then surged back to nearly 70. These type of moves, especially in the metal markets, are unprecedented. Again, I would say that in general, the volatility is likely to continue. It'll have quieter periods, but we're now entering this new period where the U.S. economy is slowly weakening. I think oil being higher for longer is going to weaken it even further. And the weaker it gets, the more people will hinge on economic data, Federal Reserve commentary and decisions, and even these type of war-type tweets or Truth Social posts. It'll create more and more volatility. So I think it's a new vibe for the market that's going to continue.
Yeah, for sure. So I'm curious. Did we get a taco? I'm wondering because the threat was 48 hours, and then Iran had responded with their retaliatory thoughts, and then we had a total pivot. And what I'm hearing is that the bond market was signaling some stress, whether that's foreigners selling or whatnot. And so curious in your take on the bond market, and do you think that played a big reason as to why we may have seen President Trump taper back, this aggression?
Yeah, and I think that's exactly what had happened here. So I do think it's a taco scenario. The key here is understanding what you mentioned. Number one is yields got close to 4.5%. Now, if we rewind and we look at where yields were back in the tariff collapse in 2025, it was when yields got above 4.5% that President Trump backed off on a lot of his really, really high tariff threats. And that started that big rally to the upside, right? And we started to talk about that taco trade over and over again. And I think, again, these type of things, you have to understand that oil, number one, PPI data just a week and a half, 2 weeks ago came out, and this was numbers from February, even before this big spike in oil. And they were already showing higher inflation. It was hot numbers. And so the president is very aware that he has midterm elections later this year. He's very aware that inflation is already pushing up. He wants the Fed to cut. If inflation goes up, there's no way they can cut rates. And so his only action here is to make sure oil comes down, and he wants to keep the stock market up. We know from his first term a couple terms ago of a president, he did not want the markets going down. He really is reactive, and therefore he's going to say things like he did today that talks are going well with Iran. Whether or not they're really happening, we don't know, but that's going to trigger a bounce in the market.
Yeah, for sure. It's interesting with the markets. The markets are obviously, paying a lot of attention to these headlines, these posts, Truth Social posts, what is Iran saying and such. And it's just swaying the markets like one way to the next. Like it's within hours, the markets are having these big swings. So can we look at what this looks like on a chart? And then also just curious in your perspective as a technical trader, how are you navigating this amount of volatility?
Yeah. So first off, one of the things is coming into this year, even the last time we talked, I was bearish on the markets. And that bearishness overall came from a very simple parallel channel here that essentially told us that we were at the high end of the parallel. Whenever we're at the low end, we tend to bounce up. And you can see, again, all these hits of these lower ends going back to COVID in 2020. And then when we were at the high end, which was the bull market high of 2021, we then came all the way back into the low end of the parallel. And so, once in October we hit this high, I kind of started to say, all right, markets are probably tapping out here. Now we pulled back and we kind of had this beautiful rounded top, which a lot of people were saying just a few weeks ago. They were saying, well, markets aren't really falling with all this bad news. again, to me, I look at this rounded top and I see institutional selling with retail kind of always thinking the markets will be okay. So retail buying, and it's basically a distribution pattern, right? Rounded tops are distribution, big money selling to retail money. Then we start to see the bigger rollover. Now, I do think we're at a point where we're due for a technical bounce on the S&P. If we look at where we came into here, we can see that we got to a point where we're kind of in this zone here of former pivots going back here to November and then over here towards late last year or mid to late last year. And so I do think we're due for a bounce. We're getting a little bounce today on the S&P, but I don't think it's over. I think that, again, even if oil were to come down, and we could take a look at the oil chart real quick here dropping today. I mean, let's just say oil comes back to $70 a barrel. It doesn't change the aspect that even before this pop, inflation was already pushing up and the economy was already weakening. This is only going to speed it up. And if prices drop on oil, then, okay, so it stalls it out again, but it doesn't change the trajectory. We're now in a new cycle of downside move in the economy, and that will pan out in the stock market.
What do you think oil is going to do? I mean, obviously, there's a lot of variables here, but, just thinking of like the Strait of Hormuz being under Iranian control, also, a lot of the infrastructure being blown up and such. This stuff took decades to build, and they impact the lives of billions of people. And so just curious, if oil and energy is, going to stay elevated for a long time or what?
So I think the snapback, whenever the Straits of Hormuz are opened, the snapback will be dramatic, and you'll see probably back to $70 a barrel. But I do think that you have to recognize that the general trajectory of oil is probably going to grind back into the 80s over the next couple of years. Part of that has to do that the U.S., which has been producing a ton of oil from these the shale side of things, the shale is actually slowly being depleted. In fact, 80% of that oil has probably already been used up, which means the U.S. will slowly be producing less and less over the coming years, while OPEC may or may not be producing more. We'll have to see. But I do think, again, oil from the U.S. has dominated things and really pushed oil down to the point where if you look on an inflation-adjusted basis, oil, when it was trading in the 60s, was as if it was trading in the 40s, right? I mean, it was that much of a difference based on inflation over the last 5 to 10 years. That slowly will come out. And so I do think that, in general, people should expect a big drop on the Straits reopening and then a slow grind back at least into the $70 to $80 a barrel range.
Okay, got it. So, I mean, longer term, so oil was already on this trajectory. Obviously, this hot war, hot conflict, spiked it. I mean, you see that big wick when I think oil hit, 117 a barrel at that point, almost 120.
Yep.
And so now, I mean, obviously, if we get some type of resolution or peace talks or whatever, I think this trade is going to crater quite a bit.
Yep.
So would you be selling oil stocks at this point?
I would be, yeah. In fact, I am short. I have Valero short, which is a refiner. I love this upsloping trend line. You can see right here, put in a nice little topping tail. It's pulled back a little bit. I still think there's a lot more to go. If you zoom out on this chart, look at how parabolic the move has been on Valero from April of last year, just vertical to the upside. These type of charts usually have big pullbacks. I would expect a pullback on Valero as low as 185, retesting the 2024 highs, which will be major support. But I think that's the play. And even like Chevron and Exxon, I think that these will see a big drop. You actually put in a topping tail as well, which is a reversal bearish signal on Friday. It's bouncing back up, but my guess is this is going to roll over here with oil in the coming weeks. And I know people are saying, oh, well, things will get work, things are going to stay hot in the Middle East. I actually am in the opposite camp. I think that the president is very motivated because of the elections, because of the inflation numbers, because of wanting interest rate cuts. He cares so much about the stock market. He's got to get oil down sooner than later. And I think that is really a case for shorting names like Exxon, Chevron, Valero.
Okay. What about some of the midstreamers? So like if we look at AMLP, the ETF, so some of these are like pay a good yield. And I'm kind of curious, what is that chart showing the similar trends?
Yeah, the one thing that strikes me here is look at this double top, right? So I know you're a trader as well, and I know that, again, in terms of this, we respect resistance at double top here, 53, 53 and a quarter, until proven otherwise. So for me, this vertical move here, if you look historically, I mean, you've had some vertical moves, but this is arguably one of the bigger vertical moves that it's had historically in a straight line. I would say this pulls back. I'd be looking for a pullback to about 50 and then maybe inching back in. But a $50, I mean, considering the volatility on this, a $50 retrace would be pretty solid and a good buying opportunity.
Yeah, because these stocks are like more of the midstream, transporters, pipelines, things of that nature. So they have less operational, I guess, risks than some of the producers and such. And so
less volatility.
Yeah. So some people just run into these and collect the 7 to 8% dividend. So I was curious about that.
Yeah.
Okay. So just thinking about fertilizers. So if we were to look at like a Mosaic or whatever indicator you want to use, just curious in your perspective there, because that's been a hot topic too.
Yeah, and I think a lot of people, it's being overlooked, is that the Straits of Hormuz, that's a huge transport zone for agricultural chemicals and fertilizers. And obviously, we've seen this thing come in quite a bit. But I would say that, I mean, you look at this chart, I mean, it is at support or close to support here, around $22.70 or so. I'd be interested in this based on this drop. Very sharp drop. Should have some sort of reflex bounce back. But yeah, it actually looks pretty good in the near term, as long as it holds this 2250 level. I wouldn't want to see it start trading multiple days below 2250, but right now it looks pretty good.
So what type of confirmation would you be looking for if you were to say, okay, we are in a bull market for fertilizers? Because some people may look at the chart and see like, oh, it was at $70, $80, back in 2022 or something like that, and they may be wondering, okay, is this an opportunity for this to go back there? So what type of confirmation would you be looking for on the charts with that?
Yeah, so for a real solid breakout, in other words, a better play than just a swing trade bounce, I would need to see this trend line break to the upside. So here, this is at $30, approximately 31. The high is being taken back from 2022. You connect it through these highs here in 2025, and then it tagged it right here. So I'd want to see price really establish itself above this 30, 31 level. And then I would say, okay, well, now it's broken out. The path of least resistance is to the upside, and you could be looking at a nice move up. Okay,
got it. Okay, so could we go and look at the dollar? What's the dollar doing in these times?
Yeah, and this is something I was fascinated about this weekend, is that, we've seen a big rally in the dollar, but historically, when you see a war go on that affects the oil trade this much, the dollar would normally be up so much more. I mean, again, granted, this was during a Federal Reserve hiking period, but this was during the initial invasion of Russia into Ukraine, right? And the dollar just went parabolic. Now, again, like I said, it was during a period where the Fed was hiking rates, but arguably the 10-year yield's gone up too. So, I mean, that's kind of the same thing as hiking rates. And the dollar, look at how tiny the dollars move up. And that, to me, remains and keeps me on the point of being more bearish on the dollar here. You could see how this area was major support going back the last year to 2 years. It's now become major resistance. And if we can't get through this, path of least resistance is to the downside. And I think that's the angle. I think the dollar is going to weaken here over the next 3 to 6 months.
Are there any long-term trend lines that you would look for the dollar to go low to?
Yeah, I think number one, so here's an interesting one, right? So we have this trend line here, and you can see how the dollar as of now is holding this level. So for me, at least, if we were to break below, let's say 97 on the DXY, that would be very concerning for further multiple year downside in the dollar. It would be a long-term trend line going back to 2014. And that, again, that's a 10 plus year trend line at this point. If you break that, it's usually not just, oh, let me just go down a little bit, right? It's usually a bigger breakdown where we could be looking at this as our next level around 88 on the DXY. And then vice versa, the only thing in the near term I'd be watching would be this zone. If somehow we could establish back above 100, maybe, just maybe, the dollar could gain some traction and bring us all the way back to 106, 107. I don't think it will, but again, just because I don't think it doesn't mean it can't happen. But again, this is your level level, right around 100. Can we get above and establish above that? Then we could head to this 106 level. My bias is for the downside, down to 88 in the next year or so.
Okay, so if you were putting yourself in the mindset of a retail investor or institutional investor, whichever way you want to think about it, why would people want to go to the dollar?
So the dollar, to me, and this is a fascinating thing, the dollar is a short-term vehicle that loses value very slowly over time, right? So, for instance, if you were in gold and you, let's say, exited, not at the highs, but let's just say $5,000 on the chart of gold, and you got out at 5,000, you could move into the dollar, let gold fall to 4,000, which is a 20% drop. Maybe the dollar drops a 0.5%, but then you rotate back into the metals at some of these levels. Now, I think gold is still going to go a lot lower here. I still think it's going to 3,500. But the point is that if you're someone who is being careful on gold and thinking gold is going to drop, the dollar can be used as a short-term asset to just kind of put your money and put it in versus Bitcoin, which could drop 10% in a short amount of time. The dollar is really not going to do that. And so it gives us this vehicle to rotate into, let an asset fall, and then rebuy that asset and get more of that asset for that dollar.
Okay. So you said gold to 3,500. That's concerning, Gareth.
Yeah.
So what's unpack that for us?
So this is what people aren't understanding, because a lot of people go to the macro, right? And the macro case of gold is absolutely correct, meaning that de-dollarization is occurring, that you're seeing more U.S. debt. So obviously the dollar is going to be diluted here in the U.S. And so all of those are bull cases longer term, which I agree with on the dollar, right? It's why on gold, why I think gold is going to 10,000 eventually within 2 to 3 years from now. But in the near term, gold has become a risk asset, and it shouldn't be. And it needs to refine itself. It needs to refine its safe haven aspect. And the best case of this, by the way, is that gold this morning, when the stock market was under pressure and down big, gold was down at 4,100. And then when Trump came out with his Truth Social post, then gold rallied all the way back to 4,400. So again, it should have been working the opposite way, right? It should have been going up on uncertainty and then coming down when these tweets are put out or these Truth Social posts are put out. And so what that tells me is that there's too many investors that are in this, and they got in because they thought it was a quick, easy trade. They got in because, gold is going up and I can make easy money on gold. If you've been in gold long enough, there's no such thing as easy money, just like silver, right? It's a safe haven asset. You have to flush those weak hands out. And so at least in the near term, meaning the next 2-3 months, I expect gold to go down to 3,500. And then it should wash out those weak hands that accumulated at 5,000 and 4,800, 5,600. Once it washes those out, it becomes that safe haven asset again. That de-dollarization is what you want to be in for. And that's where I plan to buy physical metal, right? I'll trade it all in here and do all that stuff. But physical, I don't trade. I just hold it. That's where I'll buy the physical.
Okay. So looking at the sell-off, I mean, is this the weekly chart?
Yeah, this is actually the daily, believe it or not.
Okay, so we see these huge red candles in a row, like I think it's 4 in a row. So what percentage move was that?
This year, let's take a look here. This percentage just from the 11th of May straight down to the lows, March. That was a 21.5% drop on gold. That is unprecedented. Again, you don't really see that. And so believe it or not, I will say this, even though I think it's going to 3,500, as long as we hold this 44 to 4,300, I think you get a near-term bounce on this back to 46, 4,700. And then after that, the next rollover, I think, comes in to first target at 3,900 with an eventual move to 3,500. But you're right. I mean, gold oversold? Yes, it should bounce here. Silver's oversold. It should bounce. But those would be, to me, near-term bounces that I can play as a swing trader where my bigger macro eventually flushes it to 3,500 before I buy physical.
So is this this your base case? So pretty much I'm just kind of wondering, is there a catalyst you're thinking that could send this lower to 3,500, or is this just strictly because of the support lines on the chart?
So I think the catalyst is more going to be the risk off trade in the markets, right? So, think about it like this: is if you're an investor that bought in at 5,000 and now it's at 4,000 or 4,300, let's say you use leverage, right? So leverage now, you have margin calls that come into play. You have fear. All right. So a lot of people that bought at 5,000, they were thinking it was, oh, this is an easy trade. I'm just going to go long gold. It'll go to 10,000 overnight. And obviously that's not realistic, but that's the mindset of a lot of investors. They're now finding out it's a scary trade. It's too much volatility for what they were expecting, and they're deleveraging. And that's really what it is. So it's not so much like, it's not like we're going to hear, oh, there's this happened in the world, so gold goes up. It's more in the short term. It's being ruled by psychology of the investors, where they're de-risking, and that goes with the stock market as it eventually falls down to the downside, and that should drive it down. Once it gets down there, I think it regains its safe haven asset, and then the headlines that create fear, like a bad economy or a recession, that actually will drive it up.
Mm-hmm. Okay, so are you saying like this? So I'm looking between the two areas, the zones that you have marked there, the two zones of resistance and support. Mm-hmm. So are you saying that all of that is pretty much like weak hands or traders, and it has to get washed out?
Yes. And so really, we talk about psychology of what happens here, right? So we had this big top at 5,600 and then this massive flush in 3 days down to this 4,400 level. Now, what happens is people that bought between 5,000 and 5,600, as price comes up here, they say, oh my gosh, that was so scary. I didn't know it was going to flush like that. And they start selling into it. And that's why you get these kind of bear flags that eventually price rolls over, right? And then you have all these people that are now panicking that were buying. So a lot of these people buying over here were thinking, okay, I'm buying the dip. Well, now they're starting to panic as it rolls over, and it kind of creates a snowball effect to the downside, and they start dumping it as well. And so it explains why we weren't able to take out the highs, because you had a lot of sellers here that had bought at 5,000 plus that were then scared, and they were just dumping and taking a flat out on the trade. And then also why, when this dump occurs, all these people that were buying the dip thinking, oh, it's going to go to new all-time highs, they now are questioning that narrative, and they're selling into it. And so it's all, the amazing thing is this is all human-driven, human psychology-driven, and these are the tactics that ultimately create an oversold scenario down to 3,500. And once you wash out all those people, you get them out, now the buyers can swoop in, and the big players like, Federal Reserve banks around the world that are accumulating, they'll start taking over and buying it all up.
Okay, got it.
Circa 2020, we pivoted the entire company, turned on its head, brought in new management, George B., our CEO, who's built gold mines all over the planet, and we focused in on CK, copper K. It was not reliant on drill holes and discoveries. We can go through this process, engineering, permitting, get towards a development stage asset. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
I saw like from the World Gold Council that the central banks were still buying. I did see some article about Poland selling to fund defense spending or something like that. And so that was kind of concerning for a lot of investors and such. And so, I'm imagining at some point, the price is going to be very attractive and you're going to get more buying on the central bank level.
Yep, for sure. And I agree with that. And I think just like any central bank, right? Especially with what's going on in the world, a lot of these countries do need to build up their military. We know Europe is trying to do that, Poland, et cetera. And so, if you're in and you have a massive amount of gold that you bought at an average price of 1,500, selling some is not a bad scenario at 5,000. And that, again, creates an oversupply in the near term until price comes down. And then these same countries say, okay, now we're going to start buying up gold again and putting it in our reserve.
Okay. Got it. So 3,500 gold, that's depressing, Gareth, but it is what it is. The charts just tell you what they tell you, right?
And I think keep in mind that these are shorter term moves, and that, if you're like me and you have a longer term view, then you say, okay, well, these are just the price fluctuations that occur in bear and bull markets, and eventually will go even higher. And I do believe that. It's just, nothing goes straight up, as we know.
So that the drop that we had in January, the end of January, I think to my knowledge, that was a historic move and such. And I'm kind of wondering, as the gold priced in dollars continues to go higher, if that could be the new normal for gold. So, thinking of like gold at 10,000, maybe dropping, 20% to 8,000. Is that like a new norm as the price goes a lot higher?
In general, one of the things we find out is that the more volatile the upside move is, the more volatile the downside. So, for instance, if it takes, let's say, 5 years to go from, let's say, 3,500 to 10,000, then the pullback will be much more shallow because quality investors have been slowly buying it up. The reason it's so volatile right now is because you had so many people they got in to gold for the wrong reasons. They got in because, it's just going straight up, so I need to jump on the bandwagon. And then that creates panic selling, right? If you go back to, let's go back to 5 years ago in gold, there wasn't a lot of panic selling because all the people that were buying, they were just slowly buying and it wasn't moving enough. So they were just accumulating. Didn't lure in these kind of weak-handed investors that then panic and dump on the other side. And you see this in all asset classes, in Bitcoin and all the rest of them.
Okay. So what about the miners?
Yeah, so I did buy GDX today. I did pick it up pre-market around 75. Incredible short-term play here. I still think if gold's going to go lower eventually, then obviously this will eventually go down. But I do think at this point, if we're going to get a bounce in gold near term, I think this is a good opportunity. Incredible fall, too. I mean, 30+% to the downside in a straight line. But there is a lot of support in here. So I would expect a 10 to 20% bounce off of these levels. But at that point, I think you got to expect if gold starts breaking down for eventually GDX to go lower as well.
Yeah. This isn't exciting news, Gareth.
But also, and I get that, but also it gives people that missed the trade at least an opportunity to get in at a reasonable price.
Yes, agreed. And if you have a longer term view, you can obviously
100%
average down if you got in higher than the price is here. And if you missed the boat, you could get in right now. I mean, I was buying wheat and precious metals last night on the 24-hour market, and it dropped to like 107.
Yeah.
Something like that. And so WPM, yep. And so, massive drop. And they're printing cash hand over fist. Right.
Oh, yeah.
They have a lot less risk than the miners and such. And I saw that move downward, and I said, I have to pick up a few shares.
Yep. And I think what's important, too, is that, a lot of people will say, and I heard this nonstop. When we were at 120, even at $100, but, there's so much paper, there's not enough physical, there's a deficit of physical. Those are all great narratives, and they're correct. But remember, markets in the short term act irrationally. Longer term, the fundamentals play a role. And so what we've seen here is the irrationality to the upside in that quick move up, and then the downside. Eventually, the fundamentals will play a role. You just have to wipe out the panic sellers.
Yep, got it. Okay, let's look at silver. Let's look at this bloodbath here.
Yeah, it's not pretty. I mean, same thing with in fact, arguably worse than gold percentage-wise off of its highs. I mean, from $120 to a low today of 60-ish, 50% haircut. I do think silver's short-term oversold, and it is trying to get a bounce today, and I do think it will get a bounce over the next few days, maybe back to $75, maybe $78. But the charts are still telling me, just like gold, eventually this goes back to $50 to $54. This area right in here is just some massive support area, and it is drawing price back in. And I do think that for those of us that want to buy more, we will get an opportunity even lower than current levels.
What do you think this money flows into? So once people are selling, do you think it just goes into the dollar? Where do you think this money's going to flow into?
So I think a lot of it did go into the dollar for safe haven buying. I actually think some of it actually went into Bitcoin. And if you look, right, so what we've seen here is that silver from February, mid to late February to now went straight down. Bitcoin has actually been making higher highs, right? So you can see it's been grinding up. And so arguably you could say that some money, and I'm not saying all of it, obviously, but some money has gone into Bitcoin over the last few months, almost inversely to the price of silver and gold. So I think some of it's going in there. Some of it probably is going into some of these tech names that have been beaten down. Microsoft has just been crushed. I mean, these mega caps, some of them have just been absolutely annihilated, and I wouldn't be surprised if some money's kind of bottom fishing these two.
Okay, yeah, I've been looking at PayPal. Seeking Alpha just keeps bringing up PayPal, and I'm like, man, this is freaking bloodbath here, and I'm just kind of wondering, wondering what's in their future.
Well, one thing I'll say, and again, I don't know what's in their future, but the chart setup is really good on PayPal right now. Look at this cup and handle pattern. So you have this, and this is basically a bull flag or handle. That's a very bullish chart on PayPal. So I like that. I mean, and by the way, there's a lot of these momentum names like OKLO. I mean, look at these charts down from $190 to basically 50 to 55. I mean, if we can get a breakout on this above this 59.60 level, I mean, these things could, listen, they're not going back to 190. I don't believe in that, at least in the near term. But a move back to, 75, I mean, that could be a 50% move from current levels. It is doable on some of these momentum names. And I do think, again, we could get some of those bounces.
Is this just like market psychology and people like going to the assets that have just been beaten up or names that have had significant performance in recent history, like a recency bias type thing, or what? Because I'm wondering, like, okay, folks are selling the hard money, gold and silver. They're running into the more of the risk assets, and like Bitcoin and such. And, I'm kind of wondering about that because, like, we're in the hot war. You got, potential nuclear, Lord forbid a nuclear situation come out of this, energy infrastructure being blown up, harming, billions of people and such, and, massive debt deficits. Like, the macro is just screaming for hard money. And some people argue that Bitcoin is hard money, and I do own some Bitcoin, disclosure. But, just curious why people were like selling the metals and running into like these other assets.
Yeah, the markets tend to behave where generally money chases the hot name, right? Versus the way I trade is I look for the things that everyone hates because everyone's already sold, right? So there's not a lot of selling left there. And so I usually buy stuff that's beaten down, or I short stuff like gold and silver when they were at their highs. But I think, again, you see these things where people buy into these assets at near all-time highs, and then when it doesn't make them 20% overnight or in a week or two, and they starts to go against them, then they start to panic and dump, and then that's where you see these pullbacks on gold and silver come in. Great example would be SanDisk. I mean, some of these memory plays, everyone's in them. I'm short because, again, these charts are ripe for a fall, but this will be one of those that, again, has a big crash at some point where it drops 50%. And again, I stress to people out there, like, don't chase the hot thing. Look for something that has a great long-term story but's been beaten down and kind of forgotten for dead. Those are really where you want to get in at those levels, not when you're paying crazy nosebleed levels for gold, silver. And people always think like, oh, it's never going to pull back. And yet, if you look at every asset, there's never an asset that doesn't have a correction in it, right? And the sharper it goes up, the sharper it corrects. And so just people need to really understand is that I've missed a million trades in my life. I'm defined by the trades that I get into. And so if I miss one, there's always another one coming around the corner. And if you think that way, then you're not chasing at all-time highs buying some of this stuff. Gotcha.
Okay, so we looked at a few charts like Microsoft, Oklo and such. And I know that you've been looking at these from a short swing trade perspective. Are there any that you would look at accumulating on a long-term perspective?
There are. So a couple names that I've been picking up over the last week or so myself are names like ConAgra, right? I mean, here's a company that is at we're talking about hitting lows not seen since 2009, right? You go back to 2009, this is the last time ConAgra traded down here. And you can see in the short term, we have a nice trend line on the daily chart that connects these lows right here. This pays a good solid dividend. In fact, we can go and take a look here. On the dividend side, so last payment 35 cents. So every quarter you're getting 35 cents on this thing. It's a 9% dividend yield. I mean, think about that, 9% dividend yield. You're buying it at levels the company hasn't seen since 2009. Now listen, people don't like these, right? We just talked about when do I buy? I buy when everyone hates something. This chart again is at 15, 16-year lows, pays a dividend of 9%, and it also again everyone hates it. And so you get in these cycles where these are the ones that I'm looking at. And again, it's not sexy. It's not AI. It's not like the crazy memory chip stocks. But for me, if I can pick these up and make 20% in a few months on them, plus get a dividend, that's gravy. And I think people should be paying attention to these type of names. Kraft Heinz is another one, beaten down, absolutely crushed to multi. I mean, look at this. Look at the drop on this chart here, and just incredible. Wow. And again, it pays a great dividend. Dividend yield's impressive, 7.5%. Where else are we going to get 7.5% a year on a stock that's beaten down like this, that's been around for 100 years, right? It's not like it's going out of business.
Yeah, for sure. I think another one would be, I think Hormel.
Yeah.
Hormel, or however you say it.
HRL, yep, same thing. I mean, look at the beatdown on this thing. I mean, you're trading back at levels, if we go back to the chart, from 2013. So and again, these are like, people get so caught up in the narratives, right? The AI story, that they forget about these companies. They don't want to be in them because they're like, oh, well, they're not going to be good. These will be the better performers, in my opinion, over the next 6 to 12 months. As the U.S. economy slips towards recession, what are people going to do? Well, ConAgra does TV dinners, cheap TV dinners. People are going to have to go and say, oh, I can't buy my filet mignon. I got to go back to TV dinners. Yeah. These are the ones I think that perform better.
That's some hard times right there if you have to give up the filet mignon and go back to
I know, but times are changing.
What about stocks like Dollar Tree, Dollar General, Walmart, those types of companies, if we're going into like any type of recessionary environment?
Yeah, these are tricky because they've already had a big rally because there was a trade down effect. People that were, at Target, they went to Walmart. Walmart people that, they were struggling more, they went to Dollar Tree. So we've seen this come up a little bit. I would need it to pull back probably down to about 78, right in this area, before I nibble a little bit on a swing trade or a longer term basis. But I certainly am keeping this on my watch list. There's no doubt that these type of names, they are on the watch list.
Okay, got it. Then I want to look at defense stocks like Lockheed Martin and such. Some people you got these nations saying they're going to increase their military spending. Trump advocated for a $500 billion increase to the military budget. And so it seems like the military industrial complex is set to benefit in some shape or form. What does this look like?
Yeah, so you can see there was this great trend line and marked the recent top on this. And right now it's pulled back from almost 700 to about 620 or so. So it's already corrected. This would be one where it's coming down, but it hasn't flushed out enough hands yet or investors yet for me to get involved in. I would need this to come down significantly. By the way, one of the notes here, look at this. Where are we finding support here? Look at the former pivot high does act as support. And so I do agree that the militarization side of things is going to be good for Lockheed Martin. I just think it already was factored in with this massive, like from $400 to almost $700. That's a massive move up. I think you get a small bounce, then one more correction down to 500, and then I'd start to nibble on here. So again, this would be kind of in that classified area of, this stock has got really too popular. Everyone kind of rushed in. Now you have some people unloading it, and that'll continue a little bit. So I need it to come lower first.
Okay, gotcha. And, I'm thinking about the critical minerals. Obviously we looked at silver. I think copper's under a lot of pressure right now and such. Obviously this stuff is needed, to, make the world run and such. And there's been a lot of energy around them, policy being passed, regulations being decreased and such. That's one thing that I can credit Trump for. So just curious in like your perspective on these types of stocks.
Yeah, so the COPX, which is the copper miners, has been crushed significantly to the downside. Southern Copper, I think it's called, Southern Copper Corporation, same thing. So these are due for a bounce. My only worry is that if my macro projections are right and that the U.S. economy weakens by end of year, then copper demand could come in as well, and that could push these things down even more so. And by the way, that might go right along with the idea that gold and silver are going to go lower, right? So if all the metals start to kind of sell in the same direction. So I think we get a short-term bounce here, maybe even back to 180 on Southern Copper here, but then I do think we're headed lower. Again, I don't know how low. There'll be a lot of support right around 140 on this, but I would be waiting for later this year once we get people to get really bearish on the U.S. economy and the worries, like, once you see the headlines, recession everywhere on like all these websites and stuff, these financial websites, that's when these will probably be at their bottom, and that's when we want to start accumulating.
Okay. So are you holding some dry powder as well, or are you mostly swing trading these other parts of the? I know you short and you do call options and such, and so I'm curious if you're holding any cash too or what.
I am. I always like to have some cash, even if it's leverage cash, because you just never know when a great opportunity is going to arise. But again, for me as a quicker trader, like this morning I was in stocks and I've even unloaded some on the bounce that we've seen, right? So I'm very much always in flux with that. But I always recommend people don't over leverage yourself, because the worst feeling in the world is to see a great opportunity and then you're like, oh crap, I don't have any dry powder. I can't do anything about it. Like, always keep a little, because you just never know when that opportunity is going to come up.
Yeah, for sure. Yeah, I've been parking a little bit of cash in the T-bills. I wish I would have had some more, parked more. I feel like I didn't sell enough, Garrett.
I hear you, man. I think all of us.
So lastly, I just want to look at the Dow. So the Dow at 50K was a big topic for a while. And so President Trump touted the Dow, Pam Bondi, and such. And the Dow's fell off significantly since then. And I'm kind of wondering, like, thinking about this from a, just logical perspective. Okay, they want lower interest rates. Obviously, there's going to have to be some type of agreement or negotiated terms with this issue with Iran. And the stock market is a huge factor that they tend to tout, that the Trump administration tends to talk about. And so right now it's not looking so good. And so I'm curious, what are you seeing here on the Dow?
Yeah, and what I think is so interesting is, number one, when they were pumping 50,000 and we saw Pam Bondi's talking about it and highlighting it, I mean, it literally was right into massive resistance. I mean, look at this trend line that goes back to 2023, low pivot here in 2024, early 2025, and then you broke. Obviously, the liberation sell-off was right here. And then, look, every time we hit the line, we sell off. And then obviously once we hit the even number, the bigger sell off came. And so I will say this, we are entering a zone of support. So again, just like I'm expecting a bounce in the markets in the near term, you can see here, right? So former pivot highs, these pivot highs here, there is support and the Dow is getting a bounce. But I would just caution people to I think the 50K is going to be like 5,000 on the NASDAQ, right? So if we look at the NASDAQ, you have that scenario where in 2000, the dot-com bubble occurred, and we topped out. We got above 5,000, and we didn't see it again for many, many years. I do worry that that's going to be the same for the Dow here. I think we could be literally years and years before we get back above 50,000.
Is that mostly related to, I'm not very familiar with the Dow, but assuming that it's industrial related or whatnot, is that related to when recessions hit, typically industrial companies go through issues with layoffs and all of that? I'm curious because the Dow seems like it's full of companies that are drastically different than companies that are in the NASDAQ, but typically these indices kind of trade in the same direction.
Yeah, and I think that's important. Is generally the Dow is more defensive names, right? You got the Home Depots in there, you've got the Apples in there. But if I'm correct on the economy trajectory that we do get down into the point where we're actually slipping into recession by year end, then I think even those, people are going to spend less money at Home Depot. They're going to spend less on iPhones, right? Instead of they'll keep their iPhone longer. And I do think that brings the Dow in as well for the longer term here, for multiple years before we get back above 50,000.
Okay. And are you long-term bullish on U.S. equities? I know that if the dollar's going lower, typically that benefits, foreign equities, emerging markets, such as like EWZ, the Brazil ETF. That's brought up a lot. And so just curious in your thoughts there.
So I'm pretty bearish on long-term U.S. equities here. I think that money is going to start, and I think this is partially the fact that we've gone in and kind of terrorized so many of our allies with tariffs. Whether you agree or not, our allies are not really loving us for what we're doing, and it kind of shies them away from wanting to invest money in the U.S. and kind of be putting money to work. And I think a lot of investors are now saying, okay, well, where is the next growth structure? Is it China? Will China be that next place where money flows? South America with all their minerals and rare earths? I think that's where the money is going to rotate, and that's part of the reasoning behind thinking the stock markets in the U.S. have probably topped out for multiple years, not just for a year or two. I think you're looking at many years before we hit new all-time highs.
And so just to harmonize your views here, because some people may be like, oh, well, you said you're bullish on some companies, but
Right.
you're bearish on U.S. equities. You're talking about the indices, but individual stocks, they can perform well over, a period of years, right?
Yeah. And just think about this, right? I mean, ConAgra, they've been around for so long. Kraft Heinz, Pfizer. I mean, people still need their drugs, right? They need their medicines. And these stocks are paying dividends, right? So if you're getting 7 to 10% dividend and the stock even only goes up an extra, let's say 5% a year, while the majority of stocks are going down in a recession, that's where you're going to end up doing relatively well. So if you can still find value in the markets. Now, listen, if ConAgra rallies 20%, am I taking it off the table, or at least some of it? Heck yeah. I mean, again, I'm not going to be a stickler over like, oh, but I'm holding this for the long run. I'll go down with the ship. So just keep that in mind as well. You have to be cognizant of how much it goes up. When it gets overbought, take some off the table or take it all off the table.
Yep. Got it. Well, that's helpful advice. Thank you, Gareth, for joining the show. Where can people connect with you, follow you? I know you're doing a lot.
Yeah, absolutely. Just come to verifiedinvesting.com. It's a website I started to focus only on charts and technical analysis. I always say the narratives are mainstream media. The hype is on social media. I want to make a place where we can all get probability-based assessment, and that's what we're doing here at verifiedinvesting.com.
All right. Well, you all have the information. Also, if you could hit the subscribe button, if you're not subscribed, love to have your support. We are on the road to 100,000 subs. Right now, I think we just hit 80,000. So we'd love to have your support. So thank you, Gareth, for coming on the show. Look forward to having you back.
Thanks so much. Have a great day.